They don't want you to understand this part of the game. Because once you do, you stop feeding it. Every crash, every panic, every breaking news alert you see ain't random. It's orchestrated. Wall Street learned how to profit off emotion, and fear, that's their most valuable asset. You think you're investing in stocks, but truth is, you're being invested in. Welcome to the side of the market they never taught you about. Before we get into this, like, share, and drop a comment, because we about to break down the whole game today. When the market drops, fear spreads fast. But what most people don't realize, fear isn't just an emotion on Wall Street. It's a business model. Every time fear hits, trading volume spikes. People panic sell. Hedge funds short the market. Media outlets cash in on clicks and ad revenue. That cycle is what I call the fear loop. Here's how it works. Media fuels emotion, retail reacts, institutions profit. When you see market crashing plastered everywhere, that's not just journalism, it's marketing. Fear keeps you watching. Watching means ads. Ads mean dollars. And the same fear that drives you to click is the one that makes you sell your stocks at a loss. Meanwhile, the big players, they're buying the dip you just sold. They created the panic, now they collect the reward. Because fear moves faster than logic. And on Wall Street, whoever controls emotion controls the money flow. That's the fear loop. The system feeds off panic, and the more you react emotionally, the more predictable you become to them. So if fear runs the market, how do they track it? Wall Street built their own fear meter. It's called the VIX, short for the Volatility Index. Think of it like the market's heartbeat. The higher it beats, the more scared people are. When investors expect chaos, they start buying options, bets that pay off when stocks move wildly. The more people buy these bets, the higher the VIX climbs. So a VIX reading at 15 to 20, that's calm. Above 30, that's fear. Above 40, pure panic. That's when Wall Street smells opportunity. Because when everyone's scared, prices drop. And when prices drop, big money moves in. Hedge funds use the VIX to time their plays. They don't see chaos, they see discounts. When the VIX goes up, the S&P 500 goes down. They move opposite. It's the emotional seesaw of the market. Retail sees fear as danger. Wall Street sees fear as data. The VIX doesn't predict the future. It measures the expectation of volatility. Translation, it tells pros how nervous everyone else is. And once they know that, they can build plays against your emotions. That's why they call the VIX the fear index. It doesn't move off facts, it moves off feeling. And if you don't understand it, you'll be the one moving with the fear, not through it. You ever notice how the market never moves quietly? Every dip has a headline, every headline has a sponsor, and every sponsor has money in the game. The media's job ain't to teach you, it's to trigger you. Fear gets clicks. Clicks drive ratings. Ratings sell ads. And the people buying those ads, Wall Street firms and investment products. So the same players who profit off volatility also own the mic that spreads it. When the media screams panic, retail sells. When retail sells, prices drop. And when prices drop, guess who's waiting with cash in hand?
Surprise,
the institutions. They use your emotion like a signal. When fear spikes, they don't panic. They position. They load up on quality stocks at a discount because while you're reacting to headlines, they're reading the numbers behind them. This is how the game loops. The media drops the story, investors panic, Wall Street buys low, market recovers, media says rebound, you buy back in high. Cycle complete. Every single time. It's not that the news lies, it's that it frames the truth. They highlight fear, skip context, and sell confidence later, once the smart money has already made their move. That's the real business model. Not stocks, not ads, emotion. Because the more you react, the more they earn. When fear hits the market, most people react emotionally. They sell to protect what's left, not realizing they're handing over discounts to the pros. That's when smart money steps in. They don't see fear, they see flow. When the VIX spikes and social media screams crash, institutions start buying blue chip stocks, loading up on ETFs, and locking in long-term positions at clearance prices. Here's what happens behind the scenes. Retail money flows out, usually from panic selling. Institutional money flows in, quietly, strategically. It's a transfer of wealth wrapped in emotion. They buy your fear and sell you confidence later. By the time the news flips the narrative, market recovery, stocks rebound, bull market returns, they're already sitting on gains. You buy back in late, they scale out early. That's not timing, that's design. Smart money doesn't chase price, it chases fear signals. They read sentiment data, options flow, liquidity pressure, stuff the average trader never sees. When emotion spikes, they track volume, then move in silence. There's a pattern they wait for, the capitulation point, that moment when everyone gives up. Volume surges, price tanks, and emotions hit max fear. That's their entry signal. While the crowd is in chaos, they buy the dip, hedge with derivatives, and sit tight because they understand. Markets don't reward panic, they reward patience. Every crash has two sides, a loser reacting to emotion and a winner studying it. The difference? Who's using fear and who's feeding it. Once you understand fear runs the game, you gotta ask, who controls the fear? Answer, the algorithms. Wall Street doesn't trade off emotion anymore. They program it. Over 70% of today's market trades come from bots, not people. These aren't random. They're built to read emotion. They scan news headlines, social media posts, even Reddit and X sentiment in real time. If people start panicking online, those algorithms detect it and move billions of dollars before you can even open your app. When volatility spikes, these bots start amplifying moves, shorting when the crowd sells, buying when the crowd's max scared. It's emotional arbitrage, making money off your hesitation. They can trigger chain reactions across the market with just one move. A sudden dump in futures overnight, a social signal pushed through media. Next morning, you wake up to market down 3%, global fear rising. They planted the seed. You watered it with panic. This is how manipulation hides in plain sight. It's not illegal panic, it's predictive profit. They use emotion like an input variable and turn chaos into code. By the time retail reacts, the algorithm's already cashed out. So when you see a crash, don't just ask what happened, ask who benefited. Because behind every panic, there's profit programmed into the system. Now that you see how the system runs on fear, the question is, how do you stop feeding it? Because the only real way to win this game is to stop playing it emotionally. First rule, know your plan before the panic. Smart money doesn't move off tweets, they move off targets. Have entry zones, exit levels, and stop losses written down. If it's not part of your plan, it's just noise. Fear feeds uncertainty. You can't control the market, but you can control your response. When emotion rises, discipline protects profit. Third, study what they study. Track the VIX. Watch options flow. Pay attention to volume, not vibes. Smart money trades behavioral patterns, not breaking news. Fourth, understand the emotional cycle. Every bull run ends in greed. Every crash ends in fear. If you can recognize where the crowd is, you can move opposite it. That's how you flip fear into opportunity. Fifth, limit your inputs. Every headline is designed to grab your attention, not grow your account. When volatility spikes, step back. Silence the noise. Let the data speak louder than the drama. Because at the end of the day, fear only controls what you don't understand. Once you see the loop, you can break it. You stop chasing emotion and start trading information. The real edge isn't some secret algorithm. It's mindset. It's patience. It's not reacting when everyone else is. While the world's panicking, you're preparing. That's how smart money moves. Silent, strategic, certain. So next time the market dips and the headlines scream fear, don't flinch. Zoom out. Ask yourself, is this panic or opportunity? Because once you think like smart money, you stop being the target. You become the hunter. Welcome to the new side of the market, where emotion ends and execution begins. Now that you understand how fear moves the market, it's time to learn how to move through it. If you're ready to stop guessing and start playing the game with structure, go grab the 30-Day Options Survival Guide. It'll teach you how to trade with control, confidence, and zero emotion. We built it for traders who want to flip fear into skill. Because if you can survive 30 days with discipline, you can trade a lifetime with confidence. Like, share, and drop a comment. Let's get this info to every investor still stuck in the loop. Because once you learn how fear moves money, you'll never trade the same again. See you in the next one.